Hello, everybody, and welcome to Batting 1,000, where we bring in the heavy hitters of the mortgage and real estate business. And today is going to be a great session. I've got Peter Benjamin with me today. Peter Benjamin has 19 years of experience in the industry. He's president of ACUMA, so he works with credit unions all over the country. He's also a board member of the Bollinger Foundation. He's a certified mortgage banker. He is was part of the Mortgage Bankers Association Future Leaders Program. He's a graduate from there and of the National Association of Federally Insured Credit Unions, the NAFCU. He's also a Six Sigma black belt holder. I can't wait to hear more about that. Father of three. I'm sure that's probably the thing that's most interesting. Peter, great to be with you. Thanks for showing up on Batting 1,000.
Dale, thank you very much for having me. Excited to be here. It's different being on the other side of the microphone, but again, thank you very much.
Well, it's our pleasure. I'm excited because I get to see you a couple of times this year. I'm going to be speaking at a couple of ACUMA events this year, and so excited about that. Let's just begin. Here's where I want to kind of start our conversation. You've been in the credit union space for a long time. As you know, I work with mortgage lenders across the nation, from credit unions to banks to independent mortgage bankers to everybody in between. And the thing that I've always loved about working with credit unions is the entire credit union mindset, that whole mindset of membership, the importance and the emphasis they put on working with their members, treating them like part of their family, providing a high level of customer service, making sure that it's all about a full service approach, things that we see less and less of today in the marketplace. Peter, talk to me a little bit about, your years at ACUMA, what you've seen as the president there, and this whole concept of, how you guys view and how you view customer experience, customer service, how to bring that into the mortgage arena today and really impact companies to bring a better experience to their customers.
It's the great question, and without dragging on a pretty long story, and when it comes to credit union, it's that service first mindset, and I think there's a reason why credit unions call their clients members, right? We have this saying in the credit union industry that we are, member focused, and it's actually, not to expand on it, it's members focused, service driven, and whenever you work with a credit union or work at a credit union or work with a credit union, that last part of service driven, really is felt, throughout that credit union. And, it's that credit union, and it goes out, they are not for profit. And so any type of revenue that they make, they're going out there, they're trying to take care of their employees as much as they possibly can, but the additional revenue is really returned back to any type of dividend to their members.
Right.
And although that is great, I do really want to focus on is that service mindset and that service aspect, because I can't tell you how many times I've worked with a credit union, just talking them through, how can they, do mortgages better, as weird as that sounds. And all they care about is, well, how is this going to benefit our members? How will our members feel about this process? How will our members adopt this product, the systems? Will our members care about the experience that they go through? Having spent, like you said, 19, it's more like closer to, 21. Having spent time at IMBs and banks, maybe I felt that at community banks where, the relationship was key. But this is the first place where it's actually lived, it's breathed, and it's that again, what do you want to really care about? And that membership is what credit unions actually care about. They don't care about profits. True story, and I've said this numerous times, and your people listening probably have heard this before. When I first started my last position within a credit union, I walked into my boss's office, and this was a week after getting my job or starting my job. And I asked my boss, who was the CFO, and all SVPs, all heads of divisions were reported to the CFO. And there was only two chiefs at this credit union, the CEO and the CFO. And I went in and having recently left a community bank, I asked my boss, what's my magic number? What do I need to get to in order to be successful? Because having left a community bank, I knew exactly where I had to get to be a profitable business unit. And his first response, without skipping a beat, he said, "I don't care. Just go out and do your best. You're going to win some, you lose some. Just go take care of our members, and that's all I really care about." I can't even imagine that my CFO at the community bank I worked for would have ever have said that to me.
Yeah.
Go out and take care of our clients. Just go do your best.
Yeah.
So I think that's the credit union difference.
So, ACUMA, share with the audience, if you would, a little bit about the history of ACUMA, how many credit unions you guys serve, how many members you have, and kind of what your focus is in 2025 with all of the market changes out there and rates being where they're at in the 6 to 7% range. Tell me kind of what you guys are looking at this year and what your focus is.
Sure. So we've been around since 1996. I wish I could say how we originally found it. I'd like to think that our original founding president, Bob Dorsa, was sitting at his, breakfast table drinking a cup of coffee, and he had this amazing epiphany to start this association. But I really don't know the full background. What I do know is that this association was built off a need, and that need was the fact that credit union mortgage lenders needed that extra voice. If you really think about it, you have what's now America's credit unions, formerly NAFQ and ACUNA. And although, again, America's Credit Union is a fantastic association, when it comes to credit union advocacy and education, they're second to none. But one of the things that they tend to overlook is mortgage, because they're so focused on other things. And again,
Right.
I'm not saying it as a negative. They are absolutely amazing at what they do. But then you also have the Mortgage Bankers Association. Again, amazing at what they do. There's no better mortgage education and mortgage advocacy efforts than the Mortgage Bankers Association. One thing that they often struggle with is getting credit unions to take part in their education and be part of their programs. Often, and again, there's nothing wrong with what the mortgage bankers do. They, again, you like you said, I went through their Future Leaders program. I have my CMB. I'm pretty active with the Mortgage Bankers Association. I believe in what they do. The tough part is that the two associations oftentimes do not align in their education or even their advocacy efforts. And so I'd like to think that in 1996, our founding president formed this association with the idea that there needed to be an association in the middle to bridge that gap. Whether or not that's true, I don't know. But here we are, 2025, and really that's where we are right now, filling that gap between the two associations and hoping to educate our members in both sides of that coin, what credit unions need to care about and what mortgage lenders need to care about, because you and I both know that they're two individual beasts all in themselves, right? Credit unions do things very differently than banks, and mortgage lenders do things completely different than a consumer lender would. And so that's really the history of ACUMA. Now, with regards to our membership, we have about 410 credit unions that are members. We have about 20 CUSOs, and CUSOs are credit union service organizations. So
Right.
they're think of them as a subsidiary of a credit union that performs various types of service. It can be a credit union owned mortgage division. It can be a credit union owned accounting firm, IT company, you name it. But they're a credit union owned organization that performs a variety of services or a very specific service. So we have 20 members of those, and then we have about 130 vendor members. So we're growing. And, I'm proud to say that since I've been president for the past 3 years, we've probably brought on close to about 250 members. So
Wow.
we've seen significant growth in the past 3 years.
It's great.
Now, with regards to 2025, that last part of that question, I mean, it's been tough the past couple years. I mean, ever since the second quarter of 22.
22. Yep.
It's as much as I want to say that we maintain that status quo. I know that we can't. It's still about pushing forward the mission, and that's supporting our members as much as we possibly can, and ensuring that they take back as much market share as they possibly can. The best way we can do that is continuing to strengthen our network by bringing on new members, giving them greater opportunities to collaborate. Right now, our events, and you're going to see this because you're going to speak at 3 of our events this year. Our events are well known throughout the mortgage industry of being a place where credit unions can come and openly discuss any problem that they have.
Yep.
For example, if a credit union wants to learn to or has an issue with LO comp, they probably can come to one of our events and walk away with an LO comp plan, a very detailed LO comp plan.
It's great.
And I think you're going to see that once you actually come to one of our events. But so one of our big initiatives for this year was giving our members greater opportunities to come together virtually than what they have experienced in the past couple of years. And so actually this month we've rolled out 4 new virtual networks, and they're like our committees. Like MBA has different committees.
Yeah.
So we call them networks. We rolled out 4 more, and that's really just adding to the 2 already existing ones. So right now we have 6 virtual networks, and all of which, if you think about it, they're just virtual roundtables where our members can come, collaborate, and talk amongst each other from across the country. And that's really been our main focus, because there's no better place than the ACUMA community to do so.
With all of the member companies you work with, and that's a large organization with a lot of lenders, tell me what you see that your top, let's call it 10 or 15% of mortgage lenders, what are they doing that is really setting them apart in the mortgage arena and helping them to see great growth in this marketplace today?
I think that's a great question. And it's something that a lot of our members are asking us to talk to them about. And they've actually been asking us to talk about that for a couple of years now. And to really answer that question, it's those top to 15%, or we'll say those top originating credit unions, they are the ones that talk mortgage every day.
Yep.
I think that's the most important thing. I mean, you and I both know that mortgage is a year-round product.
Mm-hmm.
Yes, there is some seasonality when it comes to mortgage, or at least there used to be. But you really can lend on a mortgage throughout the course of the year. And I think that those top originating credit unions are really focused on marketing and talking mortgage throughout the course of the year. They're not going through this you know, we only market mortgage on in those 2 months in the spring, and that's all we do. And I think that's part of the problem with some of these smaller credit unions that are struggling to originate mortgages is that there's a small window of opportunity that they're only talking about mortgage. Otherwise, their members have no idea that they even offer mortgages those 10 months, those 10 other months throughout the course of the year. A lot of credit unions, are struggling to get their boards to accept the fact that mortgage has to be a regular conversation. Yes, there may be some liquidity issues, brought on the fact that a lot of credit unions don't sell in the secondary market. Back in 2020, 2021, in that first quarter of 2022, they may have portfolioed a lot of things, so therefore they may not have a lot of room on the books. But that still shouldn't stop them from changing up, switching gears and selling now and talking mortgage every single day, training their branch staff to listen for the cues and have that when that member that client comes in, hear that cue. Well, I'm thinking about refinancing, or I need that home equity. I have a lot of home equity. Well, automatically refer that to that loan officer, right? It's better for that credit union to serve that member than have them walk down the street to that bank or that IMB. And unfortunately, a lot of credit unions, because they only talk mortgage 2 months out of the year, are losing those opportunities.
Yep. You said something really important there that I couldn't agree with more. And you talked about seasonality. And you made the reference that, well, or at least it used to be. And I've been saying this for years. There is no seasonality anymore in the mortgage market because, since COVID, since we've moved to a lot of people buying virtually, since we've moved to a marketplace where people have access to interest rates and MLS listings and all of these things in real time every day, it's not like it used to be, particularly when you consider the amount of population that's out there today and the population numbers of people wanting to buy homes, which is massive, way beyond what our inventory is. I believe that if you put focus on your mortgage production every day of the year, you're going to cultivate customers every day of the year. I think that's really critical. So I love how you talked about that. But I want to talk about that focus thing for just a minute, because I think that's critically important. I think that's a problem with all lenders today is how are you focusing your communications and focusing your attention as it pertains to mortgage on a regular daily basis. So talk a little bit about some of the marketing behaviors that you see and strategies that the good lenders are using that are generating a lot of opportunities in mortgage business around the year.
Great question. We'll say the good lenders allow their loan officers to use social media. The bad ones don't. As simple as that, right?
Yep.
And the funny thing is that the idea of leveraging social media can be as simple as a loan officer going on LinkedIn and posting a Mortgage 101 type post.
Yep.
Right. And maybe LinkedIn's not the right platform because that's not really the right place to do it. So let's say Facebook, or they post a reel on Instagram or even TikTok.
Yep.
Right. Most credit unions aren't even allowing them to do that on their own personal account, right? Because they want to restrict it, or they're worried about compliance concerns. I'm not even saying that they're talking about posting information on a listing or a product that the credit union's offering. I'm saying this is what an ARM is. This is what adjustments are, or this is what an FHA loan is, right? Most credit unions aren't even letting their loan officers do that. Right? That right there, especially with the modern borrower, I'm not going to say is half the battle. That's half the battle.
Yeah.
Though, right? I would say the other part is a lot of credit unions are really late to the game with that purchase mindset. Yes, retention business is vital to their success. Most credit unions have a member penetration rate somewhere of 3.5 to 5%. 5% is the extreme. You're doing a great job.
Mm-hmm.
You are the best of the best when it comes to credit unions, and to have 5% of your members with mortgages, stellar. Unfortunately, most credit unions focus on that metric. How do we get our members to get mortgages? The tough part is it's all refi. It's all HELOC focus.
Right.
They're not focusing on the purchase business. They're not going out there and doing marketing campaigns tailored around purchase business. Okay, so let's take that to the next step. They're not going out there and fostering a relationship with realtors. And when they do, they're falling back on the idea of, well, let's go buy coffee. Let's go get a cup of coffee. Dale, I'm sorry. You and I both know the idea of going out and getting a cup of coffee with a realtor is long gone. Realtors don't want to get cups of coffee anymore, right? I mean, a realtor can only drink so much caffeine in a day. So I think that's the problem, is that they're going after this cup of coffee. The realtor's going to say no, and then they just lose interest. They stop trying after that. And once they stop trying, they eventually say, well, I tried. It's not working out. Let's just go back to refi business. And they just give up. And the last part is, they're scared of that S word, and that S word is sales. And in today's day and age, with the mortgage business at way it's shaping up, we have to fully adopt and be comfortable with our loan officers being salespeople. There's nothing wrong with it, right? Loan officers are just as much salespeople as they are customer relations people. They need to be able to work with that member and help them through a tough place, help them find the right home, but also help them get into the next product with that credit union, right? That next sale.
Yep.
The best mortgage loan officers should be able to, once that loan is closed, be that loan officer for life.
Yep.
But also refer them over to a credit union credit card, a credit union auto loan, again, after the mortgage is closed. They should be that financial partner, that financial advisor. I'm doing bunny ears.
Yep.
For the rest of that borrower's life, really. So,
yeah.
Unfortunately, a lot of credit union loan officers don't take that commitment.
Well, and the interesting thing about that is, look, as a credit union, because you're a full service institution that covers really all of the financial needs of the customer, their mortgage is their single largest financial decision in their lifetime. If you can get them to work with you on that decision, that opens the door to every other product that you sell and service within the credit union. So it's much easier to cross-sell out of that because you've got their big investment. They're going to give you their checking account and their savings account, and they're going to buy CDs, and they're going to put the credit card with you, and and all of that. And what's interesting about what you said, I love it when you talked about the fact that they're afraid of the S word, sales. I've trained many credit unions across the nation, not just their loan officers and their mortgage divisions, but I've trained their branches and their tellers and their financial reps that are out front. And what I remind them all the time is we're all in sales. Everybody within the credit union organization. It's all how you view the word sales. For me, sales is really defined by one word: solution. That's it. You're solving the financial needs and goals of your customers. That's all you're doing, of your members. If you do that well, then you're going to be able to cross-sell every single product and service that you have over time, because you're just providing additional solutions that are layering on top and creating that more full service approach. And look, we know that people love that. Look at companies like Amazon. I mean, why does Amazon do so well? It's a full service minded organization. Today you can buy anything on Amazon. There really isn't any limit to it. And they're not the lowest price. They're certainly not. but they provide great service. You're going to have it the next day. It's easy to access. Convenience is there, and you can get anything you want. It's really the same kind of mindset that members of credit unions have with their credit unions if the credit union interacts the right way. So,
So, but also just and I'm sorry to interrupt you, but
no, please.
let's think about it from a that service mindset, right? If credit unions truly are community focused organizations, which we claim to be, the greatest way for a credit union to positively impact the communities that they serve is through mortgages, not through auto loans, not through
Yep.
consumer loans.
Yep.
It is through originating housing.
Yep.
That is the greatest way for a credit union to positively impact their communities.
Agreed.
So I don't know why so many credit unions, and I'm gonna take a step back. I don't know why too many credit unions view mortgage more so as a necessary evil rather than something that is their key to success within the communities that they serve. Again, we are community focused organizations. We care about our communities. We beat that drum. We don't, we often say we don't want CRA to apply for us. It shouldn't apply to us. Well, we don't want that to apply to us. Put more families in homes.
Yep. Yep. It's interesting because all the credit unions I've worked with over the years, and I've worked with a lot of them, I tend to find, without question, that the employees within a credit union are absolutely more in tune with their customers and really do have more of a kind of family culture, community culture, service culture by far than, for example, most of the IMBs out there. In fact, many times when I'm working with the IMBs, because I've worked with hundreds and hundreds of them across the nation, I'm always saying to them, look, if you really want to maximize your profitability and your production, quit focusing on profitability and production and take a page out of the book of the credit unions and focus just on customer satisfaction and customer experience, because all you guys do is mortgages. So you don't have anything else to confuse you. If you can, focus more on that great customer experience, kind of that membership mindset of not just treating them like a customer vendor relationship, but like a real provider solver mindset where you're truly concerned about the people in your community and you're serving them really well, your numbers are going to go through the roof. I will say the credit unions have done a great job in the way they treat people in their community, the way they treat their members, the way they treat customers who come in who aren't yet members but maybe would want to become that. We just got to get them to parlay that in a mortgage. And we solve all the problems within the credit union profit picture.
The thing is that, oftentimes, once the member gets a mortgage through their credit union, they're locked in and they'll continue to come back to that mortgage. But it's that initial push. It's that initial hurdle of getting that member to commit to that credit union is a tough part. And it's becoming more and more difficult with a younger generation because credit unions are often slow to adopt that technology or the necessary tools such as social media, which I already mentioned, to get that newer or the next gen home buyer to come to them. And that's the tough part. Right now, what gets that next gen home buyer to come to us, honestly, oftentimes is the fact that you hear stories of, well, my grandmother, told me to come here because this is where, she banks and has always banked. She said, well, come get a mortgage through my credit union. And that's why I'm here, right?
Yeah.
Oftentimes that word of mouth is the reason why the next gen home buyer is coming to their credit union. Is there anything wrong with that? No. We want that family referral, right? But that's not always going to work out, and that's not going to get you to $1 billion origination per year.
Right. Well, and the advantage, I think the missing link that I see a lot of times, you mentioned earlier that when they do talk to their members, when it comes to a mortgage transaction, is predominantly focused on refi and HELOC. Okay. Look, you've got this massive portfolio of customers. They're buying homes on average about every 4 to 6 years. There's something I teach all the time called the 9-10 principle. The 9-10 principle is simply this. Studies have proven time and again that the average homeowner is going to go through 9 mortgages in their lifetime. So out of that, they're probably going to have 4 or 5 of them as purchases and 3 or 4 of them as refinances. The bottom line is, if you start to talk to your portfolio about buying opportunities, buying up, buying down, making transition, people they know, family members they know who are looking to buy, you can cultivate so much business out of your existing portfolios. Then if you add to that relationships with your local realtors and builders and financial planners and all of that, there is just oodles and oodles of business out there for the credit unions to take advantage of. The bottom line is, here's what I think really would be very powerful for both credit unions and IMBs and banks alike, is create places where all of them can get together to compare notes, because there's an awful lot that IMBs can learn from credit unions. There's an awful lot credit unions can learn from IMBs. And there's plenty of customers for all of us to go around at the end of the day. If there's nothing else I've learned in 42 years, I've learned that. Would you agree with that thought process?
I mean, well, one, good luck in getting them getting them to share. I think you put credit unions in a room, they'll share, right?
Yep.
Now, funny enough, I'd probably get tarred and feathered for putting this together, but I think if you put a credit union and a community banker in the same room, they might
can relate.
talk,
Yep.
right?
They can relate.
They probably could relate to each other, right?
Yep.
Putting a credit union in the same room with that bank that has a stagecoach on it, probably not, right? They may not work out so well. But I think eventually there might be some pointers taken away. But you're right, there's plenty of borrowers to go around. But kind of going back to something you said, credit unions need to talk to their portfolio, and I agree with that 100%. There's enough data out there, between the GSEs, between what's out there with asset managers, what's been sold on the secondary market, HMDA, you name it, right? There's enough data out there for credit unions to look at their portfolio and do a deep dive and really assess the areas of opportunity within their portfolio and make touch points on their portfolio for that next sale, that next opportunity for them to continue that relationship with that member, right? It doesn't have to be a refinance. It doesn't have to be home equity. It can be that a purchase. Who knows what it can be, right? It can just be, hey, I see that you're at your 3.5% mortgage right now, or you're at your 2.5% mortgage, whatever it actually is, right? Interest rates are currently at 7%, and I'm throwing out random numbers right now, right? But I looked at the rest of your total debt. Right now, if you refinance, you probably can save a total of $250 a month, right? Just even having that type of conversation with a borrower might be worth it at some point in time. Having that sense of numbers and knowing at what point in time a borrower's, I don't want to say break-even rate or success rate is, or a rate where they could be successful at, could be beneficial for a credit union to assess within their portfolio, and then having that phone call with that borrower and having that borrower be ready for when that rate does happen might be worth it. Because the thing is that if the credit union doesn't start doing that, someone else is already doing it.
That's right.
Right? And that, especially if the credit union is only focused on refis, you better start doing it now.
Yep. No question about it. You're not going to create organic purchase business just because your grandmother took a loan out with you 25, 35 years ago. You've got to be proactive in the marketplace. There's absolutely no question about that. And you're absolutely right. If you're not calling those borrowers, your competition surely is. And today, one of the things that to me just makes no sense is, two things you talked about. You talked about social media, and then you talked about this whole solicitation in your portfolio. And there's so many predictive marketing tools out there today that are technology based, and companies that can come in and take your portfolio, scan that portfolio, and let you know predictors of when that customer might be in a position to buy a new home, or might be in a position to move up or move down, or might be looking for cash for certain purposes. I mean, they're very easy to spot now with all the detect data that we have. And from a social media standpoint, if your concern is compliance, look, there's all kinds of companies that have created pre-formatted videos and educational materials that you can post up on social media that they'll run through your compliance department, understand what you're looking for in compliance, and modify it to that so you have no problem. So there's plenty of solutions in these things that are not that costly at the end of the day, and your return would be huge because you're now arming your people with the tools to be able to get out in the community, not just physically, but virtually, which is critically important in today's marketplace. Would you agree?
I couldn't agree more. Couldn't agree more. I mean, just being able to have those types of tools, and whether or not you call it, I mean, some of them I kind of frame up as like member retention tools, right? Especially if it provides the your borrower, your client, your member with some type of data point that they can look at. But on the back end, it provides you with some notes like today is the anniversary of that transaction.
Right.
100% worth it, right?
Yep.
Anything to keep you engaged with that member or that borrower, that is money well spent.
Yep.
Because oftentimes, and I saw it firsthand, and I still see it today, once that transaction closed, I saw too many loan officers that just expected that borrower to come back, right?
Yep.
If you don't stay in front of that borrower, they're long gone.
Absolutely.
And the best way, if you're not going to be diligent enough to put, rely on your CRM or put calendar reminders in your Outlook, you need to automate that 100%. And you and I both know loan officers hate CRMs. So why not have a tool that will automate it for you and just send you emails saying, hey, today is Susie Smith's anniversary of her transaction. And by the way, here's how much equity she has in her property. Money well spent.
Yep.
I would take advantage of that every single day and call her immediately.
Yep. Absolutely. It's interesting because one of the common questions I've asked with the credit unions I've worked with of their management team is, how do you market for mortgages? And this is the most common answer I've heard from them is, well, we've got a poster in our branches that has our rates on it. And I look at them, I go, good, rip that down today. And here's what we're going to do. We're going to just teach all of your employees, no matter who they are, that when a member walks in the door, they're going to ask them a question while they're doing their transaction. And the question is, did you know that we do mortgages and we help people get in homes every day? And we've got some super competitive programs. Is that something you'd be interested in talking to one of our loan officers about? And I've implemented that with so many credit unions over the years, and all of a sudden their production tripled almost overnight in mortgage transactions, just because they're talking about it instead of relying on a rate sheet that's on the wall that nobody wants to see 6.5%. You might have the lowest rate in today's market, in your marketplace, it's still 6.5%. Nobody wants to see that number. What they want to know is, you mentioned it earlier, what can the mortgage do for me? How can I create affordability when I buy a home? How can I lower my payments in my current situation? Those are all things mortgages can do in spades, regardless of the interest rates. But it's getting that message out in a form other than a beautiful poster that posts a rate and says, oh, talk to us about a mortgage loan, which nobody ever does. It's just amazing to me.
And by the way, half those rates are probably out of date.
Yes.
Because They're not going around
Changes
and
all the
updating.
time.
That's right. That's right.
Right.
They're not going around and updating. Funny thing is that when I first started at my last organization, I went on a big push to train every member of the branch staff. And so I went around and made appointments with every branch and trained the entire branch staff on Mortgage 101. This is what a fixed rate is. This is what an ARM is. This is what a balloon is. Literally just Mortgage 101. And by
Yep.
the way, these are the cues that you need to listen for.
Yep.
Once you hear these things, you just ask this question: are you in the market for a mortgage? If the borrower says yes, I am, great. Here's your assigned loan officer. Here's their business card. Refer them to this loan officer. The loan officer will be here, or give them a call within 3 hours. That's all you have to do.
Yep.
We double production that first year. Literally double production that first year. Just
Yep.
by training the branch
Amazing.
staff, training them to listen for certain cues, and assigning a loan officer to a branch.
Yep.
It's that
Well,
simple.
It's the old thing, what gets focused on gets done. That's just how the way things work. So, have really enjoyed this conversation, Peter. Let me wrap this up with this final question. What are you looking forward to in 2025, and what do you see as some of the key things that will help lenders to succeed in this marketplace of 2025, 2026, and beyond?
I'm mostly looking forward to Dale Vermillion speaking at our events three
appreciate that.
times in Savannah, Georgia, Seattle, Washington, and Denver, Colorado.
Well, that's very kind.
And I really am. I'm thankful that you agreed to speak at our events. I think what I'm mostly looking forward to, in addition to that, we've been fortunate and seen a lot of success over the past 3 years, and I feel blessed that the association has seen such significant growth. I'm surrounded by a group of 3 miracle workers. There's 4 of us right now, and again, very thankful for that. I think we're going to continue that success in another tough year. So for me, I think I'm looking forward to another strong year from the ACUMA team, and in 2026. I think we have some crazy ideas up our sleeve, and we're hoping to roll out, some more opportunities for our members to learn and grow. But we're really going to double down on that idea of learning in 2026.
Awesome. Well,
Without giving away too much information.
you do have a great team. I mean, Krista and Cameron are just rock stars. So love working with them, and you guys have done some great things. Congratulations on incredible growth in a very short period of time. And your leadership has been stellar in that. So I know that everybody in the industry is very appreciative of what you bring to the table for the credit union world. And, again, I'm a huge fan of credit unions and their mission and their membership mindset. Hopefully this year we can together educate them to get mortgage to be a mainstay of what they do, along with everything else. If they become as good at mortgages as they are at the rest of the game, it's going to be a win.
That's right. That's right. That's right.
Well, Peter, great to spend some time with you. Thanks for taking time out of your busy schedule. I know that you are in high demand, and I appreciate you spending time with me, and I'm looking forward to seeing you at those 3 events. It's going to be a lot of fun.
Absolutely, Dale. Thank you.
All right, my friend. God bless. That'll wrap another Batting 1,000 team. Thanks for joining us today as Peter Benjamin and I have spent some time talking about not just the credit union world, but just the mortgage industry and what you can do to succeed. Hope you got a lot out of this. We'll see you on the next episode. God bless. Have a great day.